Tuesday, November 29th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at what the dollar index and the price of gold are really telling us. And of course, it's not a short-term look, it's a long-term look at those two indicators. I think there's a lot of misconceptions about the dollar index and gold. So that's what we're going to focus on today. Before I start, I'd like to thank all the new subscribers that have come on board in the last few days. I had a very viral video for me with Clive Thompson a few days ago. Well, it was last week on Thursday. And we will be talking again, Clive and I, sometime in December. And we've also collected a lot of the questions that you've asked. And there are a lot of questions, and we're going to try to answer them as best as possible. I also like to say that my affiliates for this video are in North America. It's Miles Franklin, one of the few registered dealers with the US Mint, and also ITM Trading. You can call ITM Trading make a consultation with Lynette Zhang's team. All the details are below in the description for those two affiliates in North America. And in the UK, of course, I'm affiliated with Gold Investments. Details also below in the description. Many of you know I've made a series of videos about how all fiat currencies are sinking, the dollar included. And what are they sinking against? Well, it's mainly against real money, gold, and silver as well, of course, because silver is also money. Gold is more of a store of wealth. Silver, I would say, is more of a currency and change, but just as important. And the dollar index as well, of course, is a measure of the dollar in relative terms to other fiat currencies, as you can see here. The euro and the yen make up about 72.1 of the weighted composition of the dollar index. So what the euro and the yen do are very important. And in the last year or so, the dollar index has been very strong, and it's mainly because of the weakness in the euro and the yen, because Federal Reserve monetary policy has been a lot more tight than those two other countries. Yes, sterling has some weighting on the dollar index as well, but I would say that the euro and the yen are the biggest factors. And yes, we have had a headwind for precious metals in the last year or so, even though we matched the all-time high earlier in the year because of the strength of the dollar versus those two major currencies. But I would say we need to look back in history and to the inception of the dollar index, and that was in March of 1973. And the reason the dollar index was created was because prior to that, the world's major currencies were fixed against each other because there was a gold exchange system, the Bretton Woods Agreement. And believe it or not, currencies were basically a fixed weight of gold, and they didn't fluctuate against each other. That's how things were. It was a saner world. But then we went into what's called a floating rate exchange system, which is basically crazy in my opinion. It's like having the inch, the foot, the kilo, the mile, altitude fluctuate every day. So can you imagine how chaotic the world would be? And this is why, in my opinion, the financial and economic world has been so chaotic ever since. So the dollar index was developed to measure the relative strength of the dollar against the other major currencies. And as you can see, it started out in March of 1973 at 100. It has been all over the place, of course. In 1980, it bottomed there when gold made an all-time high. And then I guess you could say that it went up from 1980 to the early 2000s. Yes, you had that big spike in 85. They had the Plaza Accord to weaken the dollar. That was creating a lot of problems. But ever since the beginning of the century, up until around 2008, the dollar was very weak. And gold, of course, went from $250 an ounce to 1,030. That was in March 2008. Dollar index made an all-time low just above 70. I think it was 70.69, if I'm not mistaken. And you would have thought with gold now trading at 1750 and even having been at 2000 ever since the dollar index bottomed there at 70.69, you'd think gold would be having a horrible bear market. But it isn't. It's been really strong, despite the fact that the dollar index is going up by about 50%. Gold is going up by about 75%. And what is my view on that? Well, my view on that is that this is telling us that we're going to have a huge event, not just for the dollar versus other fiat currencies, but for the whole system. It's forecasting, in my opinion, a hyperinflationary or a very heavy debasement of all fiat currencies, the dollar included. And I've put here the pretty much where gold was when the dollar index was created. You can see that we were below $100. So, and that's why I've been telling people, even before I started this channel, that all fiat currencies are sinking. I used to write a blog back in the day when I still worked in the city, and it wasn't to do with my job. It was just something I did for myself. The blog was called forsoundmoney.com. I don't have that blog anymore. And Market Oracle published one of my articles back in, I think, 2007. It was a part 2 article where I talk about this, that all fiat currencies are sinking. So, and we're going to look at the short-term picture though now for the dollar index. And I said that the dollar index mainly is the euro and partly the yen. So I wanted to show you these charts of the dollar versus the yen. Of course, it has been on a rampage this year, the dollar versus the yen. But technically, it looks like we're topping. Yes, we could have in the short term ups and downs like we've seen in the last 24 hours or so. But as you can see here, it looks like we've definitely broken this trend line and like we're forming a bear flag for the dollar versus the yen, both on a weekly and a daily basis. And the same thing is happening for the euro, as you can see here, in terms of the technicals. And the euro, this is quoted in dollars, of course, so the chart is going up. It's what the euro is doing. And it looks like we've put a bottom just below par. And we could continue to go higher. But as you can see in the short term, there are fluctuations. But that's the way I see it. So even though in the long term, the dollar index has been sometimes a good inverse indicator for gold, I would say in the very long term, since it was created, gold has gone up despite everything. But I think right now, with what's going on in the world, especially of monetary policy, I think the dollar index is pointing to the fact that the Federal Reserve is going to be less hawkish than maybe the ECB and even the Bank of Japan and some other central banks. And that's why the dollar is weakening. That's how I see it. Yes, interest rates, long-term yields in the US are dropping a little bit. They have dropped quite a bit. They are around 3.66 now, the 10-year. But don't forget, we started the year at 1.5. It's still been a bad year for bonds. And bonds could still recover a bit. But long-term, I also see bonds in a bear market. I think, as I've said many times in the last 2 years or so, that the 40-year bull market in bonds from 81 to 2021 is over. And it doesn't mean, though, that we can have corrections in this bear market. And I think that's what we're seeing now. So there you go. That's what I see. Dollar index can be helpful, but I think in the longer term, it's a little bit of a distraction, I would say, from the fact that all major currencies are being debased, and the major arbiter of value has always been gold and silver to some extent as well. So with that, let's quickly look at where the markets are this morning. I'm a little earlier today, but that's the way it is. So it's 8 o'clock London time, 8 a.m. We've got spot gold at $17.54. It's up about $12 or 0.75%. The high's been 55 and the low 39. Spot silver is up 30 cents or 1.43%. High's been 38 and the low 20.88. Right now we're at 21.24. Just have a sip of my coffee. Excuse me. Yes, yesterday the stock market had a tough day. I think the Dow finished down 1.5%, S&P down 1.5%, and so did the Nasdaq. And this morning we have recovered a bit, but not that much. Dow futures up 88 points. Sorry, the Nasdaq 100 futures up 72. And the S&P is up 17 points. So they've regained some of their losses. To the currencies, yes, early on yesterday, the dollar was very weak, especially against the yen and the euro. And then it recovered in the afternoon during US hours. Right now, we're seeing the dollar weaken again. The pound is up 0.7% at 120.44. The euro is up a third at 103.80. And the dollar is down 0.2% versus the yen at 138.12. Versus the yuan, the dollar is down 1% at 7.17. And let's just quickly look at the ruble, the dollar versus the ruble. Dollar is up almost 2% versus the ruble. It's trading around 61.40, but still very steady there around that 60 level. Let's look at the other currencies here quickly. Aussie dollar is up 1%, 67.20. The dollar is down 0.5% versus the loonie, 134.20. And the Kiwi dollar is up 1% as well at 62.28. To the general commodities, WTI crude is up 1.8%, 78.60. Brent is up 2% at 85.55. High grade copper is up 1.25% at 366. US nat gas is at 730, up just over 1%. Let's quickly check the Dutch nat gas futures. Well, that's up 2% at 126. And to finish off, let's quickly go over the US Treasury bond market. The 10-year yield is down 2.5 basis points at 368. And the 2-year is down 3.5 basis points at 443. So with that, I wish you all a great day. Take care. Bye.